on output growth, with the recovery was still weak. However, states and municipalities faced with serious budget cuts were forced to cut and raise taxes. The recovery has by now boosted tax revenues in most states, though Rhode Island, I know, is among those areas still facing considerable budget strain. Overall, fiscal policy actions at both federal and state levels and local levels look like they are no longer insignificant drag on economic growth. A third headwind has been the restricting influence of the U.S. From global influences from global economy. I wouldn't say that much about this factor today, but I will make a few observations. Initially, the euro area crisis was the biggest headwind coming from the rest of the world. Support by monetary stimulus, reduced fiscal drag, and significant institutional reforms, the recovery in the eurozone now appears to be on a firmer footing. Well, Greece is still working on that. However, growth in other parts of the globe, as we reported from China and some other emerging markets, has slowed. Weaker growth abroad, together with accomplishment implications for exchange rates accompanying there, have dented U.S. exports and weighed on the economy. The headwinds, too, should abate as growth in the global economy firms, supported by monetary policy there. Factors affecting the outlook, with the warning of headwinds that I discussed, the U.S. economy seems well positioned to continue to grow. Households are seeing the benefits of improving job situation. Consumer confidence has been solid. In addition, the drop in oil prices, which is not there now. The average saving was $700 a month. This points to better data at the Fed, given the energy savings on top of job growth. Real disposable income has risen 4% nationally over the past 4 quarters. In recent months, as noted earlier, there has been some softness in the economic data, indicating both household spending and business investment have slowed. The Department of Commerce initially estimated that real growth domestic product was flat in Q1 of 2015. If confirmed by further estimates, that this apparent slowdown was largely a result of a variety of transitory factors at the West Coast strike that was out in the port of Los Angeles, Oakland, etc. All that said, the headwinds facing our economy have not fully abated. Despite the recovery, I've noted that housing prices and a great number of home sales of residential construction actually remain quite low. The pace of business investment has also been more modest during this recovery, and some of the reasons might persist. Their businesses seem not to have had significant confidence in the strength and duration of the recovery to undertake substantial business expenditure. Implications for monetary policy, given this outlook, because of substantial lags in the effect of monetary policy on the economy, we must make policy in a forward-looking manner. Delaying action to tighten monetary policy until employment and inflation is already back to our objective would risk overheating the economy. For this reason, if economic conditions to continue to improve, I expect, and I think it will be appropriate at some point this year to take initial steps in raising interest rates. It will need to be a reason confident that inflation will move back to 2% there. After we begin raising the fund rates, I anticipate the pace of normalization is likely to be gradual. The various headwinds are still restraining the economy. The FOIC's objective of maximum employment, we talked about that, in price stability, would be achieved by proceeding cautiously while I expect would mean that all of the several years before the funds rate will be back to its normal and long run levels. Having said that, I should stress that the actual course of policy will be determined by incoming data and what that reveals about the economy. We have no intention of embarking on the preset course of increasing funds rate after the initial increase. Rather, we'll adjust monetary policy in response to developments in economic activity and inflation as it occurs. If conditions improve more rapidly than expected, it will be appropriate to raise interest rates more quickly. Conversely, the pace of normalization may be slowed if conditions turn out to be less favorable. Long-run growth. Before I conclude, we'll put discussion into the long-term context. The Fed's objective of, again, maximum employment and price stability do not by themselves ensure a strong pace of economic growth or an improved standard of living. The most important factor determining living standard is productive growth, defined as an increase in how much can be produced in an hour of work. Over time, sustained increases in productivity are necessary to support rising incomes. Here's recent data is disappointing. The output per hour in business sector has averaged about 1.5% per year since the Depression beginning in 2007. The rate is down from an average of 2.75% over the past decade. Productivity depends on many factors, including the workforce, knowledge, skills, the quality and quantity of capital, technology, infrastructure. They all have to work. Economists debate how optimistic to be about the nation's productivity. Some argue that in the decade starting in the mid-90s was exceptional, with unusually large averages in advances in information technology, and the most recent period produced a better guide. Others are more optimistic, suggesting that recent technological intervention we'll try it a third time, remain impressive, and history shows it may take some years to fully reap the economic burdens of those particular and I do not know what is right. Well, anyway, we'll skip that. It is possible that innovation, portion of relatively weak productivity growth we've seen recently may be the result of the recession itself. I don't agree as much that the economy is changing as a whole and will continue to change. One of the troubling aspects in the U.S., businesses have now started to hire people for certain jobs, routines, sales, etc., that used to require college degrees are no longer doing that. And what that has done is stagnated the demand for college graduates. A very bad situation there, and that is one situation that the U.S. will have to address. When you move with a less educated workforce in the future, that is advantageous to business, but in the long term, it is counterproductive, especially in a globalized economy. And one of the disadvantages businesses have had in the U.S. is looking very, very short term. The BBC here, we'll hear China, Peru, and Brazil. This is the idea of building a railway by the Chinese from the east to west coast. That would be 3,300 miles. But there is an impact on indigenous people in some of those zones. This would be across Brazil. It's likely to cost $10 billion. That's 6.5 billion pounds. The route is still being examined. It would begin in the gigantic, in the Brazilian port of Acul and end in the Peruvian port. So this is one of the more ambitious undertakings of the Chinese. Let's do the numbers here. This program's went on. We'll have to check the time. We'll get the markets here. And start off with the FTSE. Once we get our screen pointed in the right direction here. Nonetheless, these are Friday, unless otherwise noted, 18.25, the FTSE. In Amsterdam, well, we'll skip them. The DAC in Frankfurt was down 49.58. In Paris, 3.81 in the negative there. In Brussels, 3.82. In Madrid, in the negative, 41.20. In Zurich, 12.05 in the negative there. In Moscow, 17.36. In Johannesburg, also negative, 294.82. In Bombay, 148.16. In Karachi, 12.12 in the negative. In Lahore, 31.39. Colombo, 15.005. In Tehran on Wednesday, 58.80. In Sydney, 4.60. The Nikkei, 61.54. The Hang Seng in Hong Kong was at 469.11. In Shanghai, they were 128.17. In New York, they were down 53.72. The Nasdaq was also down 1.43. The commodities market out in the Midwest city of Chicago was also down 4.76. In San Pablo, they were down 734.76. And in Mexico, they were also down 223.35. A look at the commodities. Much of this centers around energy pricing. Brent crude on Friday, no change there, $66.54. The spot was down 49 cents at $65.65. West Texas Intermediate crude futures there were $60.70, no change there. TBM Pickett junking for joy. He remembers $15 a barrel. Oil. Cocoa futures were down $10. Coffee futures at $1.50. They were down. Cotton was down 43 cents, and sugar 18 cents. And gold on the Forex was down 90 cents at $1,204.10. Dubai was down $4.70 at $1,205.50. And let's grab anything else here. The Eurex futures here. Cocoa up $16. And robust coffee futures down $55. And this will do it for us. For those in business, make next week a productive one. For the consumer, keep your eye on the markets and on this special